Hey, everybody, welcome back to Capital Ideas. I'm Nick Morgan, co-founder of ICAN, Investor Choice Advocates Network, and co-host of Capital Ideas, where we try to celebrate the people who are bridging the capital markets for everyday investors and entrepreneurs.
And I'm Dara Albright. I'm the co-host of Capital Ideas and a proud board member of ICANN. And today with us is Mike Jarmuz. And Mike is the founder of Lightning Ventures, the largest Bitcoin-focused angel investing network, and also the CEO of Thunder Funder, which is a cutting-edge funding portal that's enabling everyday investors to invest in Bitcoin projects that were previously only accessible to accredited and institutional investors. Welcome to the show, Mike.
Hey, thanks for having me.
Yeah, no, we're really excited to have you on and really jump into this conversation. One of the things that I have read, I saw an article where you had stated that investing in Bitcoin companies is possibly the best thing that can complement anyone's HODL position, which I love that quote. And I was wondering if maybe you could elaborate on that a little bit, as well as discuss some of the challenges that everyday investors have really had in accessing Bitcoin startups.
Well, to answer your question, and I know it's kind of loose, and I think Nick would understand this greatly too. It's kind of funny just thinking about that question now. And I hope and I know that that was a quote that I had said before I was CEO of a FINRA licensed funding portal, and probably can't even say anything like that anymore. Oh my God. So I think Nick really understands that. And we're playing it kind of loose here, but yes, I do believe that it's Bitcoin first, okay? Not however many disclosures there are, I don't even know. Remember, you didn't even have to say disclosures. Now it's like I disregard it. But Bitcoin first, right? You have to have Bitcoin, whether that's a dollar cost average strategy or you have your Bitcoin moment and you get it secured, and you put about as much thought into that as possible. If you have $5,000 worth of Bitcoin, you got to give it about $5,000 worth of thought, and then you get that first. And when you look at some of the returns that can be made in venture capital and early stage tech investing, it's really hard to get that anywhere else. It's hard to do that. When it works really well. Everyone in Bitcoin talks about life-changing money, and that is life-changing money. But some of those early stage venture returns is a really different kind of life changing money. So if you're lucky enough to have those deals in front of you, like it's 2013 and you just started angel investing, and you started getting your deal flow up, and somebody puts something like Coinbase in front of you, and you're like, this is cool. I like Bitcoin. This is an exchange that's just going to sell Bitcoin. Ah, I'll put in 5 grand. Okay. That is a whole different kind of return than you're going to get from Bitcoin going from 58,000 to 280 or 300, which, hey, that's going to happen. That's a safe bet. Right. So getting access to those things is something that I'm like really passionate about. And if you think about it like the internet, right? You didn't invest in the internet. You had all these other things around it. Right. A lot of them didn't work. Maybe you think that this is like a crypto sort of analogy, but in the Bitcoin world, it's so early. So if Bitcoin goes the way that we all think it's going to go, if you understand Bitcoin and you're in that mindset, then what about the companies that are building on or around or with Bitcoin? What happens to them? What happens to the companies that are bridging the financial gap between traditional banking, how you pay your mortgage, how you get your Amex points, this sort of thing, how you like run your life with a Bitcoin standard, sort of, whether it's payroll, a lot of different things. If, say, a company like Uber was going to accept Bitcoin tomorrow or next month or next quarter, are they going to build that? Are they going to build that out themselves? Or are they going to use something like OpenNode or IBEX? Or are they going to do an integration with a Strike or something like Breeze or Lightspark? How are they going to handle adding Bitcoin? Start thinking about that from the infrastructure sort of like bridge and shovel kind of things in this ecosystem. Or when you look at exchanges like around the world, right, that onboarding ways that people are buying Bitcoin, many of them are even having record months right now in this point in time. So those are the type of businesses that I really like, real businesses. These are real early venture stage angel investments, okay, on traditional vehicles, whether it's a priced round or a safe or a convertible debt. In Bitcoin land, you really don't have tokens. You really don't have this type of like crypto token warrant kind of thing where everyone dumps and whatever, however that whole works. It's kind of like a real venture investment in the Bitcoin world. Yeah, there's some things going on with tokens and ordinals and BRC20, this and that. And I'm all about innovation and cutting the red tape in these type of investments. I mean, some of the things you have to do to form an SPV and transfer interest, I mean, it's from like another age. Okay. And I'm not all saying like, yeah, it's on a blockchain and this and that and whatever, but there's something there, right? I would like to see it be built out with a Bitcoin standard, but we'll see what happens. So those are the type of investments that I really like.
And you mentioned a couple of things in there that I just want to unpack a little bit. I mean, first of all, talking about the investors that have opportunities to access these emerging companies that are doing something in the big, using Bitcoin, open source, that are, building, protocols and platforms using Bitcoin. The accredited investors that have done that have, are doing quite well, getting access to those kind of opportunities. We really do need to bring that to enabling, smaller investors to have that equal access, which is what I love what you're doing with the, Reg CF. But even if you go beyond the investor perspective, I mean, look at what this opportunity could do to opening up just, innovation and having innovation really transform the world. So maybe you could talk a little bit about it also from the perspective of all those innovators out there that are using this type of innovation, Bitcoin and open source, and what is that going to do to the entire ecosystem?
Well, so about the accredited and what you said there, I just want to say, and I don't know if you guys talk about this a lot, but where do you draw the line? How is it that somebody can go onto Coinbase or one of these exchanges and buy something called dog with hat and put an unlimited amount of money into this thing for unknown whatever happens? How is that okay? But somebody investing 5 grand into, hey, I think this thing called Google is a good idea. No, 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 no. You must meet this qualification to do that. Why is that the way that it is? So I don't know. I'm curious if that's something that ICAN is actually out to, is there legislation here? I know that it's loosened up as far as accreditor investor rules over the years. Right now, you can have certain FINRA designations. You can pass some licensing sort of things and become accredited in other ways. So it has to be like going this way eventually, but just kind of like who's advocating for it and what's okay. And by democratizing the access to it for the people building on it, like you're saying, they can actually access capital quicker, okay? And like more so on their own terms or their own timeline, okay? It's more of a market, a true marketplace, okay, to fund ideas. And I like to joke that we are a routing node for Bitcoin venture capital, right? Or open source in the case of Thunder Funder. Okay. And if understand a little bit about the Lightning Network and routing payments for people and earning percentages, you open channels, right? We open a channel with a founder. Okay. And there's an exchange there, whether it's a few 100,000 from our syndicate or a few million from from Thunder Funder. Okay. We are like there to support them. And we're there to, in both models, actually open it up to other people. right? It's not just me investing out of a managed fund. Oh, I raised $50 million for a fund two, and this is our thesis. I put my feet up. I watch General Hospital half day. I watch a couple of pitches every now and again, and then I just make my decision, right? That's not how this works, okay? That's not fun for me as an angel when I started investing. That's not fun, giving a bunch of money to someone else and letting them do whatever they want, all right? And it's great for some people, right? But I want to read the deal memos. I want to make the decisions myself. I want to be up late doing my own research, doing my own homework, and then making my own decision. And I want to be able to learn from each of these decisions, okay, and be able to invest small amounts, $1,000, $2,500, $5,000. Maybe have a lot of conviction, and then that's just small amounts is relative to you, right? Is it 25 grand? I mean, whatever, and just get a diversified portfolio and read the updates from the founders, see where you can be helpful, learn, right? Because if you catalog everything that happens, I've made over 2,000 investments, okay, on a deal count basis. And when you start looking at a founder's story, they have like maybe 6 to 10 updates through the life of their company. It's a great post-mortem on like what happened there, right? From the fresh out of YC oversubscribed round to the, hey, we had a little bit of trouble, a little launch delay getting launched, to COVID, India, I don't know what happens. And then, you get the whole life. And then the other way too, right? The rocket ship motion. All right. And it just allows you to kind of learn as you go. And I don't know how else you get that kind of an education for all that stuff. Plus, you get to see all the really cool stuff that's happening in the world, right? Whether it's in robotics or AI or anything, right? Whatever you're interested in, is being done, and you are on the tip of the sphere for all these cool innovation.
You're right. And that could help you with your career. That could help with anything. It's not just putting money into someone's retirement portfolio, and growing their fortune. I mean, it's helping them in life. That's a great point.
And making the connection with the person and learning about what they're doing. And it is much more than just clicking a buy button on your brokerage account. It's a different way of looking at it. Mike, I did want to come back to you.
Can I tell you something funny real quick?
Please, yeah.
This is just kind of funny. I don't know. I think it's interesting. So while I was like angel investing, like looking at deals like a maniac, okay, in New York City, I owned a cafe, right? I owned a little cafe on the Lower East Side. And the trend that was going was this ordering food delivery app, food delivery startup, tons of money in the VC space, all these kind of like in New York City on the Lower East Side, there was about 786 ways that you could order a grilled cheese sandwich right now. Okay. Or my personal favorite, which is just, hey, Lenny, it's no. So what do you think I did when I had a cafe? Because I was investing in early stage startups and focusing 99%. I signed up for every damn delivery thing that New York City had to offer, buddy. Okay. And guess what happened then? COVID. And who was ready for COVID? It blew the cafe up, right? And I don't know if I would have had the foresight to really go that far with all of that stuff had I not been angel investing and exposed to like, holy shit, restaurant tech, food delivery, like this is like the future, and this is a big deal. Sorry to interrupt you. I was just
not at all. That is a good story. And it's so much more of an interesting way to learn about the world when you have a vested interest in doing it. That's really cool. Mike, a few minutes ago, you posed sort of a rhetorical question about what's being done about the accredited investor issue, but also just sort of the arbitrariness of it. And so like, that's a great softball question for us because we're coming up on a 2-year anniversary of our petition for rule change to the SEC, which would, we requested that the SEC reform the rule further along the lines that you referred to that have already happened. Let's do more of that because wealth is such a poor indicator of financial sophistication, willingness to take risks. It's just I think, pretty widely recognized bad tool for keeping people out of investments or preventing people from making their own decisions about how to invest their money. So we're trying to change that, and you may see some litigation along those lines in the coming months. But and so since you opened the door about regulation, one of the things we do at ICAN is address what we view as overregulation by the SEC. Most times the problem is not, although often it is, too many regulations. Often the issue, particularly in this space we're talking about, is uncertainty. And what we find is that when people aren't sure what the law is, people don't want to be lawbreakers in general. They steer well clear of anything that might fall afoul of the law. And in this space in particular, there's been a lot of uncertainty, and so we think that there needs to be more certainty, and one of the best tools to bring certainty is litigation. But that's our world, not everyone's world. What I'm just interested in addition to the sort of the accredited investor issue you talked about, what are some of the regulatory issues that are out there that you think make it difficult for regular people to operate in this space?
Oh my gosh. What a great conversation. Oh my God. Where do we even start? Oh boy. Let's just talk about, I can't help myself, but when you go to make these legislative suggestions, you have to take a perspective from the funding portal, okay? Because I can tell you right now, this was insane, okay? The process and dealing with them, and the industry's dying. The broker-dealer license dying, the crowdfunding industry is struggling, okay? It is dying. It is not a positive story. And they make it so hard to operate. And none of these laws even make any sense. Okay. We cannot, they made me take the word future out of our website. It said invest in the future of open source technology. They had a problem with the word future. Okay. And so many other things, right? They make it so difficult. And they kill this industry, having to submit communication to be approved, every word. This is what we have to go through right now. Like, it's hard enough to even survive. It's hard. It's almost impossible getting licensed. That we should unpack a whole nother time, because all right. And then you got to run the thing, and then you got to get started. And they drill you in every possible way. We say we like to put the fun in funding. We call them no funra. Okay. Because funra, just like everything they do, they just take out as fast as we can possibly do it, from every perspective. I mean, we can't even display our conviction for a particular investment. Okay. When we write, deal memos to accredited investors, you could say, this is the best thing we've seen out of Brazil, period. And that's true. All right. And we can't even say that on a funding portal. You almost have to discourage them from investing, just give them some numbers, and then 700 disclosures in their face about how it's all going to be lost. And that's what they're expected to just do all the time. And it's really hard. It's really hard to deal with these guidelines. It could be so easy too. It could be so easy.
So you're talking specifically about FINRA, and the whole idea of setting up a self-regulatory organization was that it won't be the SEC. It'll be an industry-led body that will presumably be more sort of responsive to industry needs. And that doesn't appear to be the case with regard to FINRA. It's from what I've heard from people who are going through what you're going through, it's not responsive.
But even the guidelines for what the issuers need to follow, okay, and the investors, a lot of it doesn't make sense and is counterproductive, okay? And in the Form C filing process, okay, and the annual process, there's much about it that is not ideal. And from the investor perspective, whenever they decided to add the investor laws, right, I think it was sometime in the early 80s, I actually don't know the year, but when they decided to add that, what was the catalyst? What was the reason to even just put that limitation in place? And then UK, for example, one of our companies, they have to administer a test to people that are signing up for their Bitcoin brokerage. That's part of a UK thing, right? This test, they have a 80% pass rate, or more than 80%. Wouldn't that be so much more, such an improvement based on this,
Right.
it's totally different.
Yeah. Well, go ahead, Dara. You
Well,
were
I was going to say to answer your question, and Nick, you could probably weigh in on this too. I think that, and I'll give the SEC some credit here. I think that there were good intentions with the accredited investor rule originally. I think it was 82. It was around 1982. And essentially, no one was able to invest in startups or private companies. And then the SEC, well, Congress was working on some legislation around this, and they were working on and the SEC was working on some rule changes. And they basically said, look, I think it would be, worthwhile for us to carve out, a accredited investor rule. Let's give the, people that can afford to lose money or afford to take the risks. Let's give them an opportunity to participate in some of these, venture or private deals. So I think they had good intentions. I don't think that what they realized was ultimately going to happen was that this market was going to become so big, the private market, and that it was going to provide an avenue for so many people of wealth and means to capitalize on. And really the people that were left out, the unaccredited investors, they didn't realize that companies would be staying private longer. They didn't realize all of the other consequences that were going to come out of this to create, I think, a country where the wealth divide just continues to widen. And, one of the things that I would say, I was just thinking about this at a brainstorm as you guys were talking before, and I thought, if you think about it, right, the accredited investor, tying it strictly to financial. That's like saying, it's like the government saying, you're fine, you could invest because you're rich. It's like the same thing as saying to someone, like basically basing what food they could buy on their weight, right? It's ridiculous.
That's a brilliant thought. That's a brilliant thought. It's like you can't play golf unless you're a pro. You know what I mean? That's
Right.
almost what it's like. You're absolutely right. It's almost like this overregulation though. It forces into like we call them shit coins. Excuse my language, but this making it so difficult because raising from your audience of people, your fans, your users, that's powerful. That's powerful for a company and to be able to actually tweet it out or put a banner on your website or email your people and like allow them to further align with your success and invest a small amount of money. Like super powerful. Substack just did a big Reg CF round recently. You know what I mean? Think about that, how that connects you even further with the people who love your company. So like it's very powerful to do that. And because it's so hard to do that, I mean, it is possible, but because it's so difficult, my theory is it forces you into this shitcoin land where it's like, hey, there's this gray area here. And you know what? We're not going to do a real company. We're going to release this token. All right. And then everybody who gets this token owns 1% of our company. And then there's this weird exchange. What kind of investor does that breed? What kind of like helpful individual that's like on your cap table and like married to you? We
Right.
invest in a company. We're there. There's not like, hey, our tokens are up.
Right.
No, it's a relationship. Okay.
Yeah.
I just think that that's unique for Bitcoin and that's unique to venture capital. And I don't really like that about crypto land, but I think that the making it so onerous to do anything like that forces people down that road. I just wish they would change and make it easier.
That's a really good point. I hadn't thought of it in that way, but your cap table as a community that's really interesting. And the fact that putting up barriers between the entrepreneur and the investor tends to destroy your ability to have a cap table community. That's a really good point.
I'm not talking about private secondary liquidity, okay, in a different transaction, right? There's great secondary transaction platforms like, Equity Zen or whatever, where you could, after you invest years later, there is a secondary market, right? From a company that you are not personally really connected to, okay, that you invested in where you have a significant markup or whatever. And that's done in a very private way of a marketplace where there is liquidity that can be accessed. It's not like I'm anti-liquidity. Okay.
Right.
These are late stage things by the time we get in. It's not like an early stage investment. But some of these other platforms, these Reg CF platforms, they're desperate for revenue. They need revenue, they need volume, they need volume. So okay, we'll open up a secondary trading market so that if I invest in the robotic lawnmower company and if I have a 2.5x markup, then I can just go on this other kind of area and this thing trades and establishes value. Like, I'm not about that. I would never set one of my founders up for that. I couldn't live with myself if we had a founder do a deal on Thunder Funder and then I allowed it to create a secondary trading market. That's terrible. You know what I mean? Like, we're in it for the long haul. So that's the way I'm viewing it. The other platforms look at it differently. They look at it a lot differently. They take a lot of that emotion out and they're looking at the numbers, but
Well, it sounds like we should keep track of Thunder Funder and you and see where you are in several months. I love the model. I really love what you're doing. For everyone who wants to find out more about ICAN, you can go to icanlaw.org. Mike, thank you for joining us. Really appreciate you coming on. And Dara, as always, thank you for co-hosting.